Hey, what's good, everybody? Happy Friday. Happy Friday. Hope you're having a great day. It is about the weekend, and what a busy week, right? Holy cow. If you're just joining us for the first time, we're financial advisors here at Jazz Wealth. We manage retirement accounts for you, but more importantly, we'll help you get your dough straight and help you with your net worth in general. We like working with customers here to teach them all kinds of different things. In fact, last night, our class in the dojo was about what happens when you buy and sell stock. Like, where does it actually go? How does that trade make its way to the market? What market? Why does someone want to interact with your order, and how much do they make? Because you know they're making some money when you're pressing that buy and sell button. So check that out in the dojo if you're one of our customers. Our goal is just to teach. So one of the things we're going to teach today is what happened in the markets. We'll cover it all. And look, if you're one of our customers, first thing I want you to do is I want you to go into the dojo and I want you to print this chart out, the S&P 500. I want you to set it to 1 year, and I want you to print that sucker out because that was a 20+% drop on the SPY. And look we've recovered all of it and then some. The markets recover 100% of all declines 100% of the time, and I think it's really, really important that you remind yourself of that in some way. So if you want to post that on the bathroom mirror or something, or however you want to do it, so that the next time the markets fall, you understand that this is part of the process, and as long as we're generally heading in the right direction and you're invested, of course, correctly, then all is good. Okay, here's the S&P 500. It added almost 0.5% on the day. Nasdaq, here, let's just go back over here real quick. There you go. You want to see the Dow added 81. You got the S&P adding 13, the Nasdaq adding 27 on the day. S&P and Nasdaq, that's going to be new record highs, closing record highs for the S&P and the Nasdaq. The Dow still playing catch up, and of course the Russell 2000 also still playing catch up. Had a good day though. The Russell 2000 is now at the tip top of its little range there. Let me show you that, because we've been mentioning the Russell a few times here. Not only because of the strong dollar, and that break to new record highs on the strong dollar, but also right here. Look, it's just trying so hard to break out. If that breaks out, now you've got all the major indices participating. So if you could make any wishes for the weekend, wish that the Russell would break out, right? It has every sort of tailwind behind it. Earnings have been decent in the Russell 2000, even the Russell 1000, and of course, the strength of that dollar, as we covered yesterday, if that's something you're interested in there. For the S&P 500, here's what you have. A busy week. Over 500 companies reported earnings so far, right? Earnings, not just this week. So far, 500 companies have reported. 67% beat on earnings, right? 78% if you're looking at just the S&P 500. Now revenue, that's been a problem. Companies missing on revenue. Just did a little research on this one today. 54% of the companies beat on revenue. If it stays the same way, and that doesn't change, that would be the lowest percentage of companies that beat on revenue since the third quarter of 2016. Now, here's what's happened. Last earnings season, you remember we were talking about this a little bit, but right there towards the mid to the end of the earnings season, that number spiked up. I think we made it up to, we were over 60+% by the end of the earnings season there. So we're low right now. If you're like, how's earnings season going? A little disappointing right now in terms of revenue, but we still have plenty of time to go. Now, if you're a company that's missed on revenue, hopefully, let me know if this is something you guys even care that I talk about, like a Xilinx. So Xilinx getting crushed on revenue. Intel in the same space, by the way, crushed on revenue, selling off. One of the things we track is how strong were the gains from companies that beat on earnings, and how weak were the losses from companies that missed on earnings. Really big really big discrepancy this earnings season. Typically, if a company beats on earnings and revenue, they enjoy a healthy gain. This time, those companies that companies that have beat on revenue have averaged a 1% gain, just under 1%. Historically, that's closer to 2%. So companies that had good earnings and revenue typically average about a 2% rise on the next day. As of now, they're only averaging 1%, so it's half of that. Companies that missed on revenue, so far this earnings season, have lost 5% on average. So they're getting beat up more. 3.5% is typically what they do lose, companies that miss on revenue. I hope that makes sense. It certainly made sense in my head, but now that I say it out loud, I'm not sure that I use the right words. Out of all the companies that are reporting earnings so far, we take all those 500 names, we put them together, and we go, how are things going in performance-wise? Actually, it's an average loss of about 0.6% for companies. So take every company that's reported, good and bad, put it together, it's an average loss of 0.6%. That's a little bit under, well, that's definitely under where we normally are. We usually have a positive 0.2% on that one there. So, all right. Anyways, just something I thought I'd point out to you. I don't know if you like that or not. S&P 500 new highs, Nasdaq new highs, Russell 2000 really starting to participate here, and the Dow really starting to shape up as well. A lot of this hint here, the S&P finishing the week off strong, a lot of that came, I think, in my opinion, from Wednesday. Remember Wednesday we had 49 new 52-week highs, and I was like, that's kind of weird, right? Because the markets didn't really do a whole lot, and we got 49 new highs when we have had the S&P struggling to find stocks that could make new 52-week highs. Thursday, we had 20 new 52-week highs, and the market actually sold off in the morning. Remember, 409 stocks gapped lower, so that had the makings of being a pretty nasty day yesterday. Didn't turn out that way, but still 20 new 52-week highs. We had 35 of them today. So it's looking better in terms of stocks making new highs. That gives you a little underlying support, at least in the short term. Makes you feel like there's some support there. Anyways, in the S&P 500, we're starting to trade a little rich from a forward PE perspective, even a trailing PE perspective. Just depends on how you want to look at it. Fundamentally a little bit overpriced. We're going to be still right around that 17.6 area. Going into next week, historically 15.7, if that makes any sense to you. Just know that things are a little bit overpriced here in the short term. That doesn't mean they can't get more overpriced, so not scaring you. One focus today was GDP numbers. A surprising beat on GDP, like the spread between what we were expecting and what we got, came in at 3.2%. We were expecting 2.5%, and everybody was so quick to discount it and say, no, Mr. Trump's not doing a good job. No, everybody that's running the Fed's not doing a good job. No, those in Congress aren't doing a good job. I give them a little bit of credit, man. I don't care what side of the fence you're on. I give these guys some credit. The economy is obviously doing well. Here's where they sort of poo-pooed on the whole 3.2%. Overall inventories. And when I say overall inventories, just imagine yourself in a store and seeing stuff on a shelf. We could get really technical with this stuff. I love talking about this, but let me break this down for the sort of people we don't want to scare away, and we want them to keep watching. Go into a store, you see stuff on the shelf. You may notice less stuff on the shelf. Storm is coming, right? If a storm comes to the Florida area, there's a lot less stuff on the shelves. But now you go in there, you see some stuff on the shelf, and you may even see stuff way at the top where they're keeping it in storage until they can put it on the shelf. Well, the GDP numbers showed that there was so much extra inventory in my store example that people see that as a bad sign. We go, okay, wait a minute, the consumer is no longer spending. And so although we had this huge increase in growth, right, overall, nobody's buying that growth. So that's actually stale inventory or potentially stale inventory that could be a problem. And so everybody really focused on that. However, we also saw that the consumer is making more money. So at the same time that there's already more inventory, the consumer is starting to make more money, or just a little bit. And so the assumption there from the people that were bullish was saying, well, yeah, they're just starting to make money. Maybe they're paying off some debts and stuff. They haven't gone out and spent that extra money yet to reduce the inventories. I hope that makes sense to you. Sometimes I ramble. If I ever ramble, somebody just be like, what? Stop rambling. Anyways, let's take a look here. Semiconductors. Oops. Oh, I messed it all up, didn't I? There we go. Semiconductors continuing to pull back here today. I think that's okay. Intel was weak on the day, so it's had a really, really strong run so far. It was from these highs to the lows, or to the start of the year, up about 40%, so I think that's okay. Oil, we could put it down here. Oil pulled back as well. I guess President Trump called up OPEC, and he was like, hey, can you stop the price of oil going higher? He asked for them to do some things to stop the rising cost of oil. Okay. I don't know what they said. Right? I don't know if OPEC just hung up on him, or if they were like, yeah, all right, sure, no problem, man, you got it. Well, I guess we'll find out. Anyway, so oil lower. Amazon higher today, 2.5%. They beat on earnings by a mile. We covered this yesterday. They added beat by $2.43. Revenue better than expected. However, not as much growth in there. That seemed to be a topic on all the financial media today. Amazon's going to spend some money for a while. We reported this on Monday because their people in their factories, the fulfillment centers, they're basically saying, come back after we're done, because they're going to remodel in 4 different states. And they also, I guess they're going to try to do one-day Prime shipping. Shows how slow of a news day it was. One day shipping for Prime members. That's going to cost them $800 million to make that happen. If you care at all, I saw they were talking about Target lower on the day by 5.5%, and Walmart would be, I bet you Walmart's included in that mix as well. So yeah, not bad. Down 2% on the day. That's all going to be in because of that Amazon one-day shipping. That's pretty sweet, by the way. Like, it's impressive what they're doing there at Amazon. Ford up 10% on the day. Earnings, right? We covered this yesterday. They didn't do as bad in China as everybody thought. They don't make any money in China, but it wasn't as bad as everybody thought. Turns out, not only are you guys buying your trucks and your SUVs, but you're willing to pay higher prices. How many times have we said that so far this earnings season? Those of you that are sitting on the sidelines and you're like, this economy's going to hell, I think the markets are going to fall. We have seen time and time again, companies report earnings and go, yeah, things were pretty good, and consumers are just willing to pay higher prices. That's good news, right? That's a pretty good, strong sign there. So Ford said the exact same thing. They say, hey, we not only are selling more SUVs and the F-150s, but people are just willing to pay increasingly ridiculous prices for a car or a truck. So Ford up almost 11% on the day. Intel was one of the semiconductors that just got brutally beaten down today. Was down over 10% at one point. Look, they just guided second quarter guidance, full year guidance. It just didn't have a whole lot to say. Even still, the stock's still higher by double digits on the year, if you happen to care. All right. Disney, I thought I'll point that out. Disney a little bit extended here. Great move, by the way, but now starting to get that waterfall, parabolic, climactic, whatever you want to call it, move to the upside. So in the short term, Disney doing great. It's one of the stocks that we own for our customers here, but I would expect that to take a little bit of a break. Speaking of parabolic, and we just talked about this, Tesla. Somebody had asked yesterday about Tesla. We mentioned you don't just go diving in when it breaks support. You let it go parabolic or climactic, or they call it a waterfall drop. And this is exactly what I was just talking about. So see what happens here. You've got this downtrend. There's no waterfall drop. There's an aggressive drop. That's not a waterfall. Waterfalls don't just do that. They roll, right? So you're moving lower and then you sort of just roll over. And really all that is a visual representation of increased selling on a day-by-day basis. So you had a red day here, not so bad. Next day gets a little bit worse. Today is really bad, very extended. So you got that waterfall drop in Tesla. That was what I was talking about there. United Airlines shares were higher, finished the day actually up 1.25%. The company said they've taken out of consideration the 737 MAX flights through July. They can't fly them anyways, but they basically just said, look, even if they do put them back in the air, we've adjusted our schedule through July. So they've adjusted there. Uber. Do you care about Uber? That's an IPO coming to the markets. You know what Uber is, don't you? They're going to price between 44 and 50. That's a wide spread, by the way. They're doing that intentionally. Don't think that they're just saying like, we just don't know how much we're going to price, but they know exactly what they're doing. So they priced 44 to 50. Unfortunately, that puts them under the $100 billion mark, and they know exactly what, that's all I'll say. They know exactly what they're doing. So it's getting attention and that's working. Also, one little bit of news here, and I'll answer questions if you have them. Credit card charge-offs. This is the debt that, credit card companies assume they're never going to get paid back. So it's credit that people have spent on their credit cards, and they're essentially charging it off, saying, we just figure you're never going to pay us back. That hit 3.82% yesterday. That's the highest that it's been since 2012. So those of you that wanted a little bearish nugget to bite on there you go. I know some of you are really bearish out there. So there you go. All right. Keep on rambling, Dustin. Don't stop. It's weird to talk to yourself. I'm talking to a lens. That doesn't get old, by the way. I'm here talking to a lens. Weird. I grew up in a time where that didn't happen, right? You couldn't do that. So I love it. If nothing crazy happens to Apple, you see it going over 210. If nothing crazy, well, I wonder how you would define that. So Apple is in a very, very steady and consistent uptrend. This is the kind of thing you wouldn't fight or you wouldn't panic on, right? Very consistent and clean. There are no waterfall moves like Disney, and there are no waterfall drops like Tesla. This is very tight and very consistent. The stock is staying close to the rubber band. If you pull the rubber band too far away from the stock, then you have concerns. If you pull the rubber band too far this way from a stock, then you have some concerns, like Disney. So Tesla is this way, Disney is this way. You're getting the picture I'm trying to paint for you. So I have there's no immediate, like you said, if nothing crazy happens, you expect that this thing keeps chugging away until the next resistance area, which is almost 210. So that's probably what you're looking at there. Nice, Ernesto. I love it. Thoughts on Ford for the long term? You're pretty happy, right? I can't blame you. Oops. Yeah, you're pretty happy with what happened today, especially from a reversal point of view. If you stuck with Ford this whole time, you really, now you're like, okay, great. This is a new direction. We're moving on. It may not go this fast, of course, to continue higher, but yeah, I would not. There's nothing I would do with it. I'd look at that and be happy. Keep teaching us dummies. Not dummies. Ford's a great dividend stock with some growth. In my opinion, is good stock. So Ernesto says, yeah, he likes it. He likes it. You know you like to talk to the mirror. I was the kind of kid, and I think this is obvious by the clothes that I wear. I was the kind of kid that was just like, alarm would go off, and I'd be like, right, school? Like, where are we going? Are we going to Disney? Or going with Dad? We golfing today? Whatever. And just go. Like, there was no prep. I'm not much of a prep. Nowadays, you like to look a little bit fresh when you can. Nice. Why is it called Jazz Wealth? Are you in a band? So I actually, and nobody's guessed this, by the way, the clock's in the background, but I actually just like how jazz musicians are very good at what they do. You don't just go out and become a jazz musician. You have to have severe talent. However, they're a very laid-back group of people. They're joking. They sort of, they never take themselves too seriously. You never see an angry jazz musician, do you? They're just laid back, having a good time, but inside they know, and people that watch them know, that's talent. And that, in short, is why I call it Jazz Wealth. I happen to like jazz music, but maybe that's just my personality. Thoughts on Intel as a buying opportunity? I will use the sort of same approach here, right? You just really got clobbered. The stock got clobbered. It will not just turn around and recover back to highs. So it's a tough one to say, I'm just going to buy it now. I get it. It's discounted, but why? Remember, when you put money to work, this is a lesson for everybody, by the way. If you have money to put to work, take me out of the equation. If we're investing with us, that's great. Thank you. All that. We're happy to have you. But if you're out there and you're going, I see Intel, it's discounted. That's only one part of the equation. Because something's at a discount doesn't mean you have to buy it. And I'm talking to my mother-in-law out there who buys everything that's on sale, right? Doesn't mean you need it. If you already have 10 gallons of bleach, you don't need to buy 10 more just because it's on sale. You might be attracted to it. Now, when it comes to investing, like, how does a man get off topic like that? You could tell what's going on in my life. Okay. Now, if you're looking at a stock, Intel, you just got a 9% discount today. However, are you going to start earning money off of your investment if you buy this 9% discount? That's the next question. I see the discount. Now can I expect my money to start working for me? And I think the answer is no. Because if you commit money today, you expect to start making a profit. You expect to start seeing your dollars grow, right? If they start moving sideways, you are going to be frustrated because you have capital tied up in an investment that's not doing anything. It's no different than if you would invest in a business. I raise my hand and go, hey, invest in Jazz Wealth. And I can't show you growth. You eventually are going to go, just give me my money back. This is ridiculous, right? That's what it is. So with Intel, because it fell so hard, it fell out of a 10-story building. You look at a person on the ground that just fell out of a 10-story building, they're going to lay there for a little bit, probably a while, and maybe need some sort of life support, right? So they're going to wiggle around. After some period of time, they will get up. They will walk again. They will fix the broken skull and all this stuff. That's where Intel's at. They just fell. If you commit capital here, you are essentially saying Intel will start to rally from here. Do you think sentiment will change that much? So it's really rather interesting psychological study if you look at stocks that way and go, I don't care if it's $1, $5,000, $10,000, $1 million that you're going to commit to a stock. You would like to see growth on that. You don't have to have the perfect entry and everything, but you'd like to see growth on it. And I just don't think Intel snaps back like a rubber band and does well there. Yep. Mr. Sprinkle says his Monster Energy's kicking butt. You got it, man. It's just intense the last couple days to see that thing. That's a very volatile stock to begin with. You know that. I don't have to tell you that. But just impressive couple days. I agree. Yep. Keeps coming up on the radar as one of the fastest movers of the day on all that stuff you see back there. Cool. You got into Disney at $111. Good job. All right. So you're a happy Disney investor. You've had a 25% increase. Should you sell now? So that shouldn't be a question, right? And my guy Phil, that's who I'm talking to, wants to know, should you sell now? You should always know the answer to that question, right? If you invest in real estate, you buy a house for the sole intention of flipping it, you already know what you're going to accept as the sales price, right? Anything else, you list your car for sale. You already know what the lowest price you're willing to take is. You can have some fun negotiating, but you already know, right? Think of it the same way with Disney. If you invest in a stock, you got it for $111. Amazing trade, right? Great job. Now, you already know, right, where you want to sell it. That's the problem, is you don't get that in the markets, right? You get people that now you go, well, it's at 140. Can it go to 150? Oh, can it go to 160? Don't do that to yourself. Always set a target ahead of time. And by the way, there's nothing wrong with selling a little bit, right? You have multiple shares. You could sell some here. If it goes a little higher, you could sell a little bit more, a little bit more, a little bit more. So that's a roundabout way of saying, plan ahead of time, right? Same thing on the downside. You bought at 111. Would you have sold if it went to 110? It did, actually. But let's say 105. Would you have sold if it went to 100? Would you have sold if it went to 90? At what point would you have taken the loss relative to the profit that you were expecting? You see what I'm saying? If you want, it's so funny. I'm talking about this again. So if you want to make 10% on a stock, or let's use your example, 25%, but you're willing to lose 25%, do you know how successful, how many trades you have to get right in order to make a profit at the end of a year, month, or whatever? If you're willing to lose 10%, and you're going to shoot for 25, then it becomes how often do you hit 25%? But still, you have to have less trades profitable. So it's a fascinating study. You should know how much you're willing to lose, how much you're willing to, or when you're going to sell, and keep in mind you can sell in multiple spots as well. Chris Bodie, my man. Yeah. Chris Bodie is, you want to talk about, if you don't know who Chris Bodie is, he's more of a jazz musician, plays a little bit of everything, but I swear that guy, we're listening to a recording and he's just holding it there, not really doing anything. He's phenomenal. My favorite trumpet player is Arturo Sandoval, by the way. That is by far my favorite player, who actually sent a custom video to my mother for her birthday. So very, very cool. It's on my social media, I think. Oh, you got some interesting things there. Yep. He loves Vanguard, at least the Santa Clara type. Oh man, trying to get me off topic. It's almost season, right? Less than a month till move-in and the season begins. Some of you know what that means. I love it. Cool. All right. I think that's it. I did my job. I covered everything for you. What a busy week. I want to make sure I got everything. I did get everything. I'm happy with that. Yeah, that's good. We'll be back next week. We'll do this all over again. I really appreciate you guys watching. I hope you have a great weekend. I think we're good to go. Yeah, if I helped you in some way, maybe you'll hit the subscribe button. Yeah, enjoy. Have a great weekend.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.